The evils of a specie currency. Usury society established gold and silver as a circulating medium, in order that exchanges of commodities might be facilitated. But society made a mistake in so doing. For by this very act it gave to a certain class of men the power of saying what exchanges shall, and what exchanges shall not, be facilitated by means of this very circulating medium. The monopolizers of the precious metals have an undue power over the community. They can say whether money shall, or shall not, be permitted to exercise its legitimate functions. These men have a veto on the action of money, and therefore on exchanges of commodity. And they will not take off their veto until they have received usury, or, as it is more politely termed, interest on their money. Here is the great objection to the present currency. Behold the manner in which the absurdity inherent in a specie currency, or, what is still worse, in a currency of paper based upon specie, manifests itself in actual operation. The mediating value which society hoped would facilitate exchanges becomes an absolute marketable commodity, itself transcending all reach of mediation. The great natural difficulty which originally stood in the way of exchanges is now the private property of a class, and this class cultivates this difficulty, and make money out of it, even as a farmer cultivates his farm and makes money by his labor. But there is a difference between the farmer and the usurer. For the farmer benefits the community as well as himself, while every dollar made by the usurer is a dollar taken from the pocket of some other individual, since the usurer cultivates nothing but an actual obstruction. You cannot monopolize corn, iron and other commodities as you can money, for to do so you would be obliged to stipulate in your sales that payment shall be made to you in those commodities. What a commotion would exist in the community if a company of capitalists should attempt permanently to monopolize all the corn. But money, by the nature of the case, since it is the only legal tender, is always monopolized. This fact is the foundation of the right of society to limit the rate of interest. We conclude, therefore, that gold and silver do not furnish a perfect medium of circulation. That they do not furnish facilities for the exchange of all commodities. Gold and silver have a value as money. A value which is artificial, and created unintentionally by the act of society establishing the precious metals as a legal tender. This new artificial value overrides all intrinsic actual values, and suffers no mediation between itself and them. Now, money, so far forth as it is mere money, ought to have no value. And the objection to the use of the precious metals as currency is that, as soon as they are adopted by society as a legal tender, there is superadded to their natural value this new, artificial and unnatural value. Gold and silver cannot facilitate the purchase of this new value which is added to themselves. A mediator is not a mediator of one. Usury is the characteristic fact of the present system of civilization. And usury depends for its existence upon this superadded, social, unnatural value, which is given artificially to the material of the circulating medium. Destroy the value of this material as money, not its utility or availability in exchange, and you destroy the possibility of usury. Can this be done so long as this material is gold or silver? No. Whatever is adopted as the medium of exchange should be free from the above-named objections. It should serve the purpose of facilitating all exchanges. It should have no value as money. It should be of such a nature as to permit nothing marketable, nothing that can be bought or sold, to transcend the sphere of its mediation. It should exist in such quantity as to effect all exchanges which may be desirable. It should be coexistent in time and place with such property as is destined for the market. It should be sufficiently abundant and easy of acquirement to answer all the legitimate purposes of money. It should be capable of being expanded to any extent that may be demanded by the wants of the community. For if the currency be not sufficiently abundant, it retards instead of facilitating exchanges. On the other hand, this medium of exchange should be sufficiently difficult of acquirement to keep it within just limits. Can a currency be devised which shall fulfill all these conditions? Can a currency be adopted which shall keep money always just plenty enough, without suffering it ever to become too plenty? Can such a currency be established on a firm, scientific foundation, so that we may know beforehand that it will work well from the very first moment of its establishment? Can a species of money be found which shall possess every quality which it is desirable that money should have, while it possesses no quality which it is desirable that money should not have? To all these questions we answer, emphatically, yes. 3. The currency, its evils and their remedy. Bank bills are doubly guaranteed. On one side, there is the capital of the bank, which is liable for the redemption of the bills in circulation. On the other side are the notes of the debtors of the bank, which notes are or ought to be, if the bank officers exercise due caution and discretion, a sufficient guarantee for all the bills. For no bills are issued by any bank, except upon notes whereby some responsible person is bound to restore to the bank, after a certain lapse of time, money to the amount borne on the face of the bills. If the notes given by the receivers of the bills are good, then the bills themselves are also good. If we reflect a moment upon these facts, we shall see that a bank of discount and circulation is in reality two banks in one. There is one bank which does business on the specie capital really paid in, there is another and a very different bank, which does business by issuing bills in exchange for notes whereby the receivers of the bills give security that there shall be paid back, by a certain time, money to the amount of the bills issued. Let us now investigate the nature of these two different banks.